Welcome to the Midwest Moguls Show, where we talk all things business, real estate, and entrepreneurship. Let's dive into today's episode and make business enjoyable again. Welcome back to the Midwest Mogul Show. We have Kevin Gracyalny on the podcast today. Kevin has 270 some rental units, spec builder, house flipper, rental property owner, world-renowned master of acquiring real estate debt. Kevin, tell us.
That's the most accurate.
Yeah, exactly. I was like, I had to throw that in at the very end. But so, Kevin, what got you into real estate? Where did the real estate bug come from?
Well, so in college, I was selling Cutco and worked and wanted to, you got to find something to invest into.
Yep.
And so real estate just became attractive and looked like you could produce higher yield out of it. And actually went from selling Cutco to, instead of just being on commission, wanted to own the business. And so started importing and selling products.
No kidding.
And we still do that,
Yeah.
Go to state fairs and home shows and those kinds of things. And then kind of used the cash that kicked off and started getting into the rentals.
Yep.
And, a lot of debt later, here we are.
Oh, I know.
Yeah. No kidding.
That's what it's always about. So did you have the entrepreneurship background within the family, or what got you into the selling Cutco? Was it just a happenstance, circumstance, or?
It was a happenstance thing.
Okay.
Well, and two of our uncles, they have had their own businesses and had at the time.
Yeah.
And so there was some of that, but it was just selling Cutco is just a kind of means to make a living.
Yeah.
Gotcha.
And do that.
Was there any books that you had read, whether it was Bigger Pockets, books, or any, I guess, Rich Dad, Poor Dad, any of those books that kind of, I guess, got you thinking, okay, maybe real estate is my next, venture to go into?
Yeah, because you read all these different books about investing, and so there were a lot of them, some of the Dave Ramsey books, and Tony Robbins wrote a book, Money Master the Game, and that were just about investing in general. The Rich Dad Poor Dad, that one kicked off, and I think it does with a lot of people, the appetite for real estate. But then Bigger Pockets, the podcast was incrable. And I listen to your guys' podcast all the time when I'm driving. Each time a new one drops.
Thank
Yeah. It
you.
is very good.
Thank you.
Thank you.
But that one, because when we were traveling, doing all these shows, going all over the country, that it gives a lot of road time, and it was great to I've listened to every episode of Bigger Pockets, and some of them multiple times, and it lays a good foundation. But it was a lot of the actual education came from listening to those podcasts and podcasts like this.
Yeah,
awesome.
So I guess take me back a little bit, because I kind of gave the highlight reel really quick of, okay, hey, you have 270 some, or you're about to have 270 some rental units. Just completed the spec build, under contract on that. You flipped numerous houses, all of those things. You started off in Cutco sales, or knife sales, we'll just summarize it as that stepping stone of gaining the confidence to go from, hey, I'm a salesman, to an actual investor. What was the thought process like there? Did you run into struggles? What was that sort of like for you?
Yeah, because you have the theory,
Yep.
and then you have to bridge and through the execution,
Right.
So I remember the first property I bought, it was right at the same time of buying the first order of inventory to sell. And I'd $17,000 in the bank, and it was a $71,000 side by side in Green Bay.
Oh, dang.
Yeah,
good pricing.
Right. Well, and at the time, it was a mix of excitement and being terrified of
correct.
Because in the inventory business, you buy it and you sell it, and you get these returns rather quickly once you sell them.
Yep.
And so it was this might have been a mistake, and you look back and it's I should have done more of those,
right?
But yeah, so there definitely was some degree of concern, but it was more just, it kind of made more sense to kind of stress test these theories that you hear about. So there was some, there was some trepidation, I guess.
Yeah.
But But the theory, you hear enough examples of it, and
Mhm.
it's like, it exists.
Correct.
Yeah.
It allows you to kind of step into it.
Well, and especially listening to all the podcasts and like it was the same thing, Bigger Pockets, like religiously. I was listening to it. And I'm like,
Yeah.
okay, I was selling real estate at that point. I'm like I hear all these people having success
Mhm.
and they're flipping houses and they're doing all these different things. It's like, why not us or why not me? Like, why can I
Right.
not do that? And then it's just taking that stepping stone or having other people encourage you to do that. So did you have, like, obviously Joe, your brother, was on the podcast probably months ago at this point.
Mhm.
Did you guys jump into it together? Were you the first one? Was he the first one? Or how did that work on that side?
Yeah, at the beginning, we kind of jumped in at the same time.
Yep.
And the first 12 or so properties,
Mhm.
we ended up going in together.
Awesome. Yep.
And and we still own those, and those were, and it's the same thing. That was the first kind of bigger chunk of
Yep.
Right.
stress testing this. And those, looking back, have been really good now. So
Yep.
we kind of got in at the same time, and yeah.
Was that, I guess, was it pretty beneficial to have someone next to you side by side doing the same thing, I guess, together versus you just doing it by yourself? Because then you're able to bounce ideas off each other and kind of analyze the deal. I guess, would you kind of recommend if going into it, having someone else kind of by your side to just be able to, go through that whole process? I feel like, partnering up with like Carter,
Yeah.
it just takes a little bit more of that stress and like that, I guess, uncertainty.
Anxiousness.
Yeah, anxiousness.
Right.
Kind of off your shoulder because you're like, okay, I'm doing this with someone else. Yeah, you have another set of eyes versus just yourself. Was that kind of beneficial? Did you see the, I guess, benefits with that?
In general, I
Yeah.
think it's kind of case by case on if
Right.
someone needs that extra kind of shoulder to lean on, someone to
correct.
talk through things with. It can be really helpful for some people and others unnecessary.
Right.
At that time, because just getting into the trade shows and self-employed and kind of resetting the lendability clock.
Yeah.
Right.
Joe was working as a teacher, and so I was able to kind of lean on him with his tax
Yeah.
returns.
Oh, nice.
That mine wouldn't, the banks
Exactly.
would have said no.
Yeah.
Yep.
So it was relevant because of that reason.
Mhm.
I prefer kind of doing stuff on my own where
Yeah.
you can.
That's
make
what
your
I
own
was about to ask
decisions
next.
And,
Yep.
I prefer that.
Yeah.
But for some people, they may prefer to partner. And,
Correct.
And that's great. They both can work.
Yep.
You know.
And Joe and I were having a conversation about this recently. Well, with a property that we just sold. So we had owned it it was a 3-way partnership, Joe, myself, and then my dad. And it was a Airbnb house close to Lambeau Field. And I had mentioned to Joe, I'm like, Joe, the partnerships are great if it allows you to get into the place and do what you want to do and everything like that. But then on the flip side of that coin, partnerships can be, obviously, worst case scenario, they can be extremely destructive.
Right.
Or they limit what you actually want to do. And meaning, like, say Joe wanted to hold on to the property, but 2 partners wanted to sell it, or 1 partner wants to sell it and the other 2 want to own it. Then it's like you're always having this internal battle. Not necessarily that it's a
Yeah, you
bad thing,
do.
but it's like, well, hey, maybe I just do things on my own. Maybe it takes a little bit longer, or maybe I'm not as profitable, but still you're acquiring things 100% yourself, and then you don't have to answer to anyone but yourself or the lenders or whatever the case is. So
Right.
I don't know. I think for some people, finding a partner that is strong where they're weak might be a good thing.
Mhm.
But again, if you can try to do it on your own, that would be my encouragement, because I think obviously you make a hell of a lot more money, and it might be better.
And it's like if something's worth buying 50% of,
Yep.
it's worth buying 100%.
Correct.
Of.
Yeah.
Right.
So if you can take it down, take it down.
Yep.
I think you hear commonly like people that are first getting in, like they both want to buy a duplex or whatever it is, and then they're like, I'll live in one side, you live in the other, and and it just
Doesn't really work out as well as you can.
like
map
each
out
of
in
you
your
buy a
head.
duplex,
Mhm.
unless you don't have the capital and there's
Right.
some like
Correct.
real need
Yeah.
to put it together,
Yep.
and that's different.
I was just going to kind of elaborate, like partnerships, I think come in handy when both sides are bringing something to the table.
Yeah.
Now, if it's just one side's bringing everything and the other person's just kind of hanging out and, tagging along and profiting from that, then, those partnerships maybe aren't the best ones to get into.
Yeah.
Obviously, starting out as someone like you in your situation where getting finance helped out because your brother was, a teacher, that obviously, brought something to the table versus if
Mm-hmm.
both of you guys were, self-employed, and going through the same struggle, then obviously you're both in the same boat. Then yeah, obviously go get your own property and do your own thing. So that's
Right.
just one thing I wanted to add.
Yeah. And I know we talked about this on the
Yeah, we
last
did.
show. It's like, okay, obviously partnering with people that can capitalize on the weaknesses versus like, hey, do you have the money? Do you have the resources? Do you have the deal? Do you have whatever it is that you actually have versus if you have nothing and you're just kind of hitching yourself on for the ride, then it's like, well, I don't know. In the long term, it
can be unfair.
Correct. And it generally, people start reflecting on things after the fact. I know I have been in partnerships throughout the years, and it's like, would I do it again? Probably not. Like it just didn't make sense. I think we're better off going our separate ways, and there's no harm done. There's no ill will towards those individuals, but it's like, hey, we don't necessarily need each other anymore, which is totally fine. People grow.
Yeah.
So now, like, obviously you got into the properties, you built up the portfolio over the years. How, I think the biggest misconception that people have is, okay, yeah, 200 and some rental units. It's like, oh God, Kevin is making a shit ton of money. It's like, God dang, like he is just rolling in it.
Yeah.
What has been your experience on that side? Because I think people who listen and
let's
watch,
peel back the layers.
I know.
Let's turn this into reality.
Because I know what my experience has been, and what I advise. But what has been your experience?
So 2 months ago, and to be fair too, like it's I don't own 100% of 270 units. It's probably 2/3 or 3/4 somewhere in there that I own, and then the other quarter and a third are with Joe or like my other brother Tony or our property manager, and we have some together, and so it is kind of a mix of it all.
Yeah.
But the last two, so I've been investing for 7 years.
Yep.
And especially heavier the last 5 or so. And the last 2 months have been the first months that globally it actually produced an income.
Yep.
So and which is great to kind of get on the other side.
Right.
And that's normal. Like initially I thought it was like you buy them and do a burr and you do, a unit turns, you renovate it, place a tenant, and then it's like producing income and you're good. And you go and do it to the next one. And it's kind of does work like that, but the stabilizing cost can be substantial. And like the more you buy, it just kicks the can down the road of when the income is. So this has been a normal part of the process where when you buy it and you get a good price, but you have to do the work, you have the cost of doing the work. So it just kicks it down the road, but you buy the distressed ones at a better price and it's better overall.
Yeah.
So for my experience, it's been the equity's been wonderful. And we've all kind of been blessed by increasing values.
Of course.
So it makes us look better, smarter than we are. But it's been great, and I know in 5 and 10 years it's going to be really good. But it's taken longer than I thought it was. Which I thought was a problem, but turns out to be kind of normal.
And I think people just, like, and I've had so many conversations like, hey, I want to get a rental property. I want to like quit my job. I'm like, okay, well, reality is it probably won't happen from like one rental, maybe not 5 rentals, at least in the first handful of years. Now, maybe 15, 20 years down the road, if they're like, you're paying them off or rents rise or interest rates fall or whatever the case is, you do a refinance, then you're starting to pull a little bit more equity, but then also you have unit turns and you have capital expenditures that need to go out because you're replacing roofs or windows or siding or miscellaneous stuff. And I don't think like the real estate industry in general, they always make the conception about, or they always make the representation that, hey, you can acquire 10 of these. You're going to live on passive income. You're not going to have to do anything. And how has that been? Because are all of your units, are they currently managed by a property manager?
All of them.
What made you decide on that? Because I know there's some people who they will not give up their units no matter what. What was the catalyst for you on that decision?
Well, especially with traveling, it kind of made more sense to have someone on local, because when I was out on the road all the time, it made it a lot easier just to have someone there. And even still today, the approach of I could retain more, or if someone wants to self-manage, you do retain more margin. But you have to do the work. So if you can make up that income elsewhere, you kind of get to pick what do you want to do for a living? It'll add to your income to self-manage, but then you have to do the work and you have less time to do these other things. So
Right.
For me, it just kind of was a better fit. And I'd rather chase down the next deal than,
Correct.
and do that multiple times rather than, just manage them.
Yeah. It allows you to keep scaling up and to keep, like you said, buying more properties, focusing on the business side of things versus, I guess, managing people and the tenants and all that kind of stuff. That's one thing that I feel like a lot of people, they get in their head, okay, I'm going to go ahead and manage all these properties. Now I'm making $500 a month, maybe profit, if that. Versus if I were to get a property manager, it might be, half that, if not less.
Right.
But I think it's, you're buying your time back, and then you're able to use that time to grow your net worth even more than if you're just to stay at, say managing 10 properties. It pretty much takes up all your time. So,
and it could be too, like if someone's, you need to eat dirt and grind and put your head down, especially as you're getting that base down. So like if people are getting into this, it may be necessary for them to especially where prices and interest rates are, for them to have to just not lose money. They may have to just manage themselves, and it's just the chapter that you're in, and in time that may change, or if you're good enough at making money, you hurt yourself by managing.
Correct. That's what
and
I
it
was
can
about
go
to say.
either way.
And it's, if you have the natural tendency, which I think all of us at this table, that you're halfway decent at sales, it's like you're in no regard should you be a property manager. Like you're the clerical side of things, the collections, the tenant communication, the hospitality, the everything like that. It's like, that's not my strong suit.
No.
And I don't enjoy doing it. So when we hit that threshold of, okay, let's put our nose down. Let's grind through things, learn the business a little bit. And then I'm like, okay, once we learned it, then I felt comfortable handing it off. And then now we can kind of keep track of the managers a little bit, but it'll never be as good as what you're probably hoping for, but it can be good enough, and it still allow you to grow and be profitable and do the things that you actually enjoy.
So like you right now, are you self-managing, or
no? So we third party. And it's for the probably for the first 2 years of buying rentals, roughly speaking, we self-managed. Because I'm like, well, I don't know. And we actually didn't, I wasn't familiar with the property management process. I'm like, you don't know what you don't know. So I'm like, okay, well, I'll learn all this stuff, go through it. We had to file some evictions. We had to just learn kind of the hard way, which probably isn't smart. But after doing that, I'm like, well, now I'm comfortable. And then we built a relationship with a local property manager, and it's been pretty good. Like it's not perfect by any stretch of the imagination, but it's good enough that it allows us to focus on flipping, wholesaling, what we're good at, and then delegate the rest to them. And then
you're
still
good
able
at finding deals.
Correct.
So you get a better return on your time
without a
finding
doubt.
the next one.
Yeah, then talking to a tenant or worrying about a repair or miscellaneous stuff. And I'm like, it takes so much time, and it takes so much mental bandwidth that I think most people don't account for, but it becomes more of a burden than anything. And especially from sourcing deals from absentee owners or rental property owners, it's like the ones that are selling at a discount, generally speaking, are the ones who are self-managing. And they might have 1, 2, like 3 properties.
That is true. You do see that is
that
is how it goes.
Like it's generally speaking, because it's like the bigger property owners, like the properties might not be perfect, but they still have a rent roll. They still know how many people are in their units, how many have been turned, what's the occupancy rate, all of these different things. They know what tenants are in there, the leases are proper, versus the landlord who's like, oh, I just had to file this eviction. Now the person trashed the unit and they haven't paid rent in 6 months. And you're like, well, dang, if you had a standard operating procedure, they would have been out 3 months ago or 4 months ago. So teach their own on that side. I know it's a learning curve nonetheless, but have you found like there's a certain asset type that you like the most as far as buying and holding, or what has that been like?
Yeah. So, cause like the upper lowers and I've been able to find a lot of just, relative to like where their value is, good prices on them.
Of course.
And there's just happens to be so many of them. There's just the quantity of them is so much greater that the maintenance and then the tenants, given the location that they're into, like just seem to just have often problems. And so the side by sides and apartment buildings have definitely been much more stable. Like if you look at every like 12-month period, you look at, okay, how these been holistically. And they can produce more income when they're performing, but then they also
The
have
upper lowers, you're
Yeah.
saying.
the
Yep.
upper
Yep. Okay.
lowers.
Okay.
And then the side by sides and apartments, the margin is thinner, but
Yep.
they're much more stable.
Yep.
And so this has now been and I think it's kind of common where people, and this has been my experience, you cut your teeth, you got to build some equity on the
Yep.
upper lowers, but then, you transition those into the apartments and side by sides. And that's kind of what's been happening the last couple of years.
Yeah.
Um,
And it's the same for us because it's like the upper lowers are generally, they're not in the nicest of locations. They don't attract the tenant base is typically, they're fine, but it's not the highest quality tenant because the rent prices are a little bit cheaper.
Right.
So if you take into consideration all those things, it's like, okay, do you want to buy the upper lower duplexes, work through those things, or are you better suited personality wise for side by side, something a little bit less maintenance?
right.
And that's where for me, like the less headache, the better.
Well, and that's kind of part of it's almost like because you get those at a better price. So the debt service is less, but then
Right.
the maintenance and vacancy and those expenses are higher.
Mhm.
So it's like you almost start trading out. Would you rather have a higher debt service and then lower other costs
Mhm.
where you're also paying down the loan and it's a bigger purchase price, so the 2% appreciation or whatever is on a bigger nut,
Yep.
Mhm.
or have a lower debt service and then higher other costs.
Mhm.
I think it's just
Yeah.
better if better to have the higher. It works out better
Yeah,
to have the
yeah.
higher
Yep.
debt service. And
Correct.
the better buildings.
And
Yeah.
You're
I agree.
paying for
and they're
them,
newer
but-
buildings.
Yeah.
Like
And
it's,
newer,
Yeah.
yeah.
It's like and people discount that. And like in Wisconsin, obviously we have a wide array of, okay, early 1900s built, early or
Yep.
late 1800s built duplexes. It's like,
Mhm.
God dang, that's like a
Yeah.
fire waiting to happen.
Yeah.
So,
Well,
and it's nerve wracking.
and there's components in there too
Yep.
where like now every time I walk a building, just from seeing all the maintenance,
Yep.
like slow drains and leaks seem to be
Yep.
like the most common
Oh,
maintenance.
it's
Mhm.
crazy.
So when they have like the PVC piping,
Yep.
even if they're older but they've been replaced, like that's great.
Yeah,
You don't need to
exactly.
get tickled pink about
Yep.
it.
Yep.
Or copper lines or PEX instead of the galvanized plumbing. Like
Yep.
those are
Uh-huh.
just you guys may look at
Oh,
those things too, and it's like
Right.
so much better. You know,
Correct.
Yep.
And but when you're first getting into it, you don't even
You don't
realize
know.
that. Like
Yeah.
you don't know the good from the bad, and that's where, like, of course, you can join coaching, you can join all these different things, and they'll give you the ideal scenario. But
Mhm.
until you walk them, until you actually own something, it's like it's so hard to teach that component of
Mhm.
Yeah.
okay, this is what you want versus this is what you don't want.
Right.
And I think you do have to experience it for yourself in the greater spectrum of what the industry is. And so now I'm kind of transitioning the conversation a little bit. So, are you still actively wholesaling? Are you pursuing wholesaling as much or not?
really.
Not
It's been probably a year since
Okay.
the last one.
so, but you had a unique approach to it that I wanted to just like talk about a little bit
Mhm.
because you had what you call like transparent wholesaling, if I'm not mistaken.
Mhm.
And you would give away, or you would tell buyers, pretty much anyone, it's like, okay, I have it under contract for, we'll just use round numbers. I have it under contract for $100,000. The buy it now wholesale price or the minimum suggested price is $115,000.
Mhm.
Was there a certain reason that you decided to do that, or walk
Yeah.
me through that a little bit?
So
And I do respect it. Like,
Yeah.
No,
I just want to put that out
absolutely. Yeah.
because I
Yep.
think that's
well, you guys
Amazing.
are so transparent. Like you're
What's-
talking about all the strategies and mechanics
Correct.
and things
Yep.
you guys do in marketing
Yeah.
and things
Mhm.
that are kind of coveted.
Yeah.
Commonly in this space, and you guys are very transparent. You guys operate
Yeah.
the same way.
yeah,
You know,
I appreciate that.
it seriously, it's
Yeah.
a beautiful thing. You know,
Mhm.
but yeah, you know, the wholesales I wanted in because I could find more deals than I could reasonably
Correct.
afford to buy.
Right.
And so it made sense to like, well, let's monetize these opportunities. And the balance point then between, because if someone's wholesaling, you're going to give a price to the seller, you're giving a price to the buyer, and you make the spread in between.
Yep.
And you, from my perspective, like it's the seller that should be getting as much as possible. They're the ones that have owned it for however
Mhm.
long and maintained it. And
Yep.
it's been their investment. You want them to have a good investment.
Correct.
The seller should be making the lion's share. And then, but then when you're also trying to sell this to someone else, like I look at it as, you know, what price would I pay for the building?
Correct.
Exactly.
And, you know, and intrinsically, it either put, I think a lot of wholesalers try to make as much as they can,
Correct.
which I completely understand from the business side. But like I wanted to not do an auction. There have been different wholesales where people offered more money
Yeah.
than what I was, like I already told someone, hey, you're going to get this.
Yeah.
And someone else said, oh, I'll pay you this much more.
Yeah.
And it's like, no, I already told
Correct.
them they're going to
Yeah.
get it.
Yeah.
And it's, so it was just kind of this is the price.
Yeah.
And some of them, and that was it. It was kind of first come, first serve.
Yeah.
This is the price because I think this is
A deal.
if you pay more, then it's not worth buying at. With how much work needs to be done.
Yeah.
So trying to come at this while making money as a business with integrity to all parties, and then also like really laying out, because I bought some wholesale deals where like they don't say you have a video and that's it.
Yep.
And it doesn't capture. It
smell.
doesn't capture, the
Yeah, the
smells,
smell, yeah.
absolutely, and just like different things, and like you can capture there's
exactly.
dings on the door, but not on the front side, and it doesn't show, and just there's a lot. It's different than seeing it in person. And so like I bought some wholesale deals where it's like, I think things could have been more openly like, hey, be mentally prepared and budget for X, Y, Z.
Yeah.
So trying to lay out, this is what's nice about the property.
Correct.
And this is the upside, and then this is what you're going to have to address.
Yep.
And then like one other thing that I did when wholesaling was like I'd put down a rehab budget
I saw that.
what my costs would be. And then it's like if other things came up, like a tree was in the yard and I didn't think about it when walking in.
Yep.
And they're like, oh, I'm going to be spending $4,000 or whatever to get rid of this. Then I'd reduce the wholesale price by $4,000, even if we were already under contract.
Interesting.
To because it just seems fair,
Yep.
And doing it that way, it does have that benefits. It does feel good to operate that way. The downside is from the business is you're making less money because if it's not an auction, you could be selling these for 10 or 15,000 more or 5,000 more, and you're giving up that upside to try to make sure they're getting a better price. So it has its benefits and it has its downsides, but I like it that way.
I think like as you're talking, it always like reputation comes to my mind.
Yeah.
I'm like, okay, you laid out the numbers for what you knew and you offered it at a fair price and everything like that. And there's the reputation component of, hey, I'm not trying to screw anyone over here.
Right.
Like this is what I'm thinking the numbers are at. If you think you can sell for more, great. If you think it's worth less, so be it. Then you don't have to buy it.
Right.
But this is where it would be a win-win for me, win-win for the seller, win-win for the next buyer. And it keeps your reputation intact because that's what I worry about. And Joe and I have conversations like, I don't ever want to have to call a seller and be like, hey, we're not buying your house anymore. Like our partner backed out or we contracted for too high or anything like that. So we've shied away from that. And I also don't want to sell a deal to someone. And I know people are supposed to do their own due diligence and everything like that, but I don't want to knowingly sell a deal that I know someone's going to get absolutely screwed on in 3 or 4 months from now when they go to re-put it on the market or try to rent it out or whatever.
Yeah.
So I always worry about that side of things, and I try to keep at least the some sort of reputation intact because I'm like, I plan on being in the business for quite a while.
Yep.
I don't plan on leaving it or stopping flipping or wholesaling or owning rentals for the considerable amount of years to come. But I don't know. I respect that side of things because I look at that and I know like we don't blast properties out nearly as much as we probably should, like in the grand scheme of things. But we have these reputable buyers that we sell to on a consistent basis that I'm like, okay, could we have gotten more? Probably. Do we need to get more? Maybe, maybe not. Like for the business, would it make more sense? Probably. But I know they can perform. There's a comfortability factor there.
Yep.
I like working with them and I would like to continue to sell properties to them just because it's easy.
Right.
And I think that holds a lot of weight in my own mind. Now I know people will differ in opinions and I respect all business models because I think there's pros and cons to everything. But I understand where you're coming from on that side of things. I just wanted to understand kind of your thought pattern about it. And I fully agree with you there.
And I think it definitely says a lot about like your character and just the values that you have because you're looking at it from the standpoint of I want to provide the best service, the best product for the buyer the next buyer that's going to be purchasing it. And that just also shows those individuals that are buying these properties from you that you're someone that they can rely on and that you're not going to bullshit them. You're not going to try pulling one over them. And I think that just also shows that, you're willing to just share, the stuff that no one else would probably share. And you're going to create those longer relationships that just hold on a lot tighter than if you're just, trying to throw out, properties, put on auction. You really don't even know the buyer. You never create a relationship with them. And that's something like Carr was talking about, is like we created some really great relationships with cash buyers that we keep on sending properties to because we know what they're looking for.
And they trust you.
And they trust us.
That's exactly
and they've compensated us in so many other ways where they've even paid more than what we've, asked for, because they know it's still going to be a good deal and there's always going to be another one behind it that they can get. So it does
real win-wins.
It really is a huge
exactly.
win-win. And like I was saying, those relationships are going to last a lifetime versus if you're just trying to wheel and deal, get it off the books and try, maximizing your profit, but screwing the other person, then they're never going to come back.
Yeah.
So
yeah.
Well, I think there's the component of knowingly screwing the other person.
Yes,
Because if
that's
someone
true.
decides to pay whatever they decide to pay, then it's like to each their own on that.
Exactly.
So I just want to preface that because I don't want
that's a good
someone to misconstrue it as like, oh, hey, these people are always taking advantage of other people. It's like, if they elect to pay that, as long as the information's truthful, so be it.
Yeah.
Now, if there's stuff that's misrepresented, then it's like, okay,
Yes.
you're getting into that gray area of morals and ethics of not being there. And that's what I don't like. Like, I don't like doing business with people like that. And it kind of sours the entire industry because then people get, I don't know, upset at wholesaling or flippers or rental property owners or whatever the case is. But I don't know. From what you've experienced, did you have something to say?
Oh, sorry. I was
it.
going to
Yeah,
say,
go
like,
for it.
and you strive to have this, and I know you guys operate this way too, like, and you do strive to have a good, healthy business, and have that, but also try to do the right thing, whatever it is. But there have probably been, I don't know, I think there have been like 4 or 5 properties where like I'll go into, when I did wholesale of, if a buyer doesn't come through or you can't sell it or you paid too much or whatever, you still close it.
Correct.
Yep.
And there have been 4 or 5 properties over my career where I backed out of.
Yeah.
Like one of them was in and it's my own fault.
Yeah.
But like one was a firehouse out in Shawano, Brandon Farley.
Okay.
He just had him on, and I still feel terrible about this, but like my rehab budget, I had all the line items in there, but my my calculator, I didn't have all of them in there. So I was off by like 40,000.
Oh, wow.
And so I would have gone into it losing whatever it was, 10 or 15,000 at the price I was going to buy it at. And, and he understood and, but, and he was nice about it, but still like it was, you still make mistakes. You just try to reduce those, and,
you're human.
Anyway.
Right. It's like we're all
things still happen. You just try to not have them happen.
Yeah. And it is, I think the more experience that I've gained, at least it allows me to comfortably have the uncomfortable conversations, whether it's with owners, other investors, so on and so forth. And it's like, I'm not trying to hide anything from any owner. Right. Like if they ask me questions, if they're one, like I was having a conversation with an owner yesterday. He's like, so what do you think it's worth when it's done? I'm like, probably like 230, 240. He's like, oh, really? And I'm like, yeah. And he said, I was walking him through what I think we would do for the rehab and then where we would need to buy it at. He's like, yeah, I guess that makes sense. And so he's like, yeah, just give me a little bit of time to think things over, make a decision. And he had to do a 1031 if he would sell it. So I'm like, okay, it's not a rush thing. I'm not going to pressure him into a scenario. But I feel as if I wouldn't have done that, then it's like, well, what's going on? Like, why isn't this person being truthful? And people get a sense of that, whether you're in person, you're over the phone, you're doing things online, whatever the case might be. And I just think the easier or the more experience you gain, the easier those conversations are. And I don't know if you've had the same experience, Kevin, but
absolutely.
Yeah.
And it does help. Like they like you because, and want to work with someone that's, telling them what their real opinion is or what their options are or whatever. Because they could just do the rehab if they wanted to.
Correct.
And if they want to, great, but they may not always want to or have the budget for it or whatever. And, it like when we go in and we talk with sellers, it's the same thing of kind of unpacking what their different options are.
Yep.
If they list it as is,
Mhm.
if we buy it, and they'll have the benefit, they'll make more money listing them, especially if they do the work and list
Correct.
them.
Mhm.
Or even just clean it out and paint the walls and don't do much, but do it on the cheap. They're going to make more money and try to lay out those different things, and then they decide whatever they want to do. But it makes them want to work with you.
Right.
Like I've seen other investors where they'll kind of rip the property apart in front of the seller.
It's terrible.
Yeah. I hate that. I hate
Yeah,
that.
it's too bad. Like,
Yeah.
and then it kind of puts so I understand the mechanics and the strategy behind it, but it's like,
Mhm.
inciting fear and whatever, and they create this perception in their mind like they're not going to be able to sell it or whatever,
Yeah.
or it's worse than what it really is, or the cost to fix something. And
Mhm.
it's just, seems, like there's better ways to do it.
Yeah. And we've actually gotten like locked up deals where someone had previously gone in there, looked at the property, made them an offer. But when I had gone in there, looked at the same property, they say, well, this other investor came in, they're, basically ripping the property apart, like you were saying, and just kind of having a negative tonality behind it.
Yeah.
And it just creates that distrust. And they're like, honestly, I just, like, you could be at the same price or even lower. I just don't want to work with that guy. Like,
Right.
It's basically
That's exactly it.
a used car salesman that's trying to just, get you to buy this beater that's going to break down in 10 miles.
Yep.
And I think a lot of times when we do provide that trust, when talking with a lot of sellers, they also want to see us succeed. Like I've countless times, and I'm sure all of us have, where they're like, I hope you make a lot of money on this.
Right.
Like, and I like they
Damn
want
right,
you to
we
make
better
money.
make.
Yeah, they want you to make money, but it's like,
Let's lower that price.
Do you want to go a little lower then? Can really sweeten the pot. But they want to see you win because they see that trustworthiness, and they're not just dealing with someone that's trying to rip them off and make a lot of money. They just see that you're a hardworking person. You're trying to be honest and basically make an honest living. And I think that says a lot when talking with homeowners that are in a situation where they want someone to just kind of rely on and trust, because a lot of people have been kind of screwing them at that point.
Yep.
So
Well, and I think of it. So say you had your personal house or whatever, any one of us at this table, and you invited someone over that you don't know, like you don't know them from the next person. Maybe you responded to a cold call, a letter in the mail, online advertisement, whatever it is, and you willingly invite them in, and then they tear apart your house.
Yeah.
It's like, how are you going to feel? Like I would be like,
I feel attacked.
like, what the fuck? Like what, why? And that's where, like, even having conversations with owners, who cares about the condition of the property while you're there?
Yeah.
Like, of course, the price has to reflect it, but you don't want to make them feel bad. Like they're probably,
know.
Exactly.
They know this needs work.
It's like, you're not.
Sometimes they don't. They're like, oh yeah, you don't have to do anything. Sometimes they have to.
And I'm like, okay.
Usually they understand.
Yeah. And it's just getting to the reality. And there's one-off scenarios, but still, I'm like, just try to be friendly. Like, be a decent human. And I think that's the most important thing, especially when it comes to the sales side of things, because no one likes working with a jerk. And the more people do that, I think the less deals they're going to get, because you're not going to strong arm someone. It's their house. Like, maybe on a one-off scenario, you might be able to, but I think in the general scheme of things, it's like, no, you're not going to be successful doing that. But have you found that there are certain parts of the business, from flips, rentals, building, wholesaling, that you enjoy the most? Like, what is your kind of bread and butter if you had to boil it down to one or two things?
Well, in terms of like all the different kind of things you can do, I love the rentals. I'm
really,
I love the rentals and the math behind it. Where in 20 years, what does this look like? And that's everything that I do for a career. Is the compass. It all is just to produce income to invest in more rentals. It's kind of interesting, like on this topic we were just talking about, that, and even trying to incorporate that into the landlording of like, you kind of go through these, like how to operate a good business, but trying to do it, with good morals. Because like every tenant, that is one of the things, the two things I don't like about this whole process are like the sellers that like I want to pay them as much as possible, but the numbers, especially with where prices are and interest rates,
Right.
it's like you can only pay so much from a business. Otherwise you do it enough times and you go bankrupt, you know?
Yep.
So like, you know, I'd like to be able to pay the sellers even more, which just the numbers when you back into them just doesn't,
correct.
You can only pay what you can pay. And then the other side then is like the tenants where you buy these, a duplex or apartment building or whatever, they've been getting a sweetheart deal on rents because they haven't been raised for 10 years. And if I own my shit for another 20 years, it'll probably be this. I plan on doing the same thing, you know? And, but then it's like you need to break even just to not lose money. Not even trying to get a profit, but to not lose money. You need to raise the rents from $600 for this 2-bed apartment to $800 or whatever it is. And it's like that is still a human being where they have bills, they have a family, they're trying to do the best they can with what they know,
right?
You know, and so in that process of some people can afford that gap and some people don't, and they find somewhere else to go. That's one of the things I'm not a fan of. So like in trying to bring a solution forward where you can try to marry all of them together is like just give them more notice so it's easier to find something, you know. And I think that that's one thing that as a property owner, as someone can do. But it's still like you need to not, if you lose money on it, you are going to go bankrupt.
Correct.
Right.
You know,
Yeah.
especially if you do it enough times.
Yeah.
Yep.
So it's just, you know, those are the two things, but rentals, I love the rentals.
That's,
and like,
it's crazy to me.
it's
Well, it's not crazy because obviously you have quite a few, but what is it? Why do you get such joy out of buying, acquiring, holding? Like other than the fact of
the math.
really,
So you're
the
very
math is
very
just
analytical when it comes down to it. Would you say?
Yeah.
Yeah.
It's like, you know, even if it doesn't produce income, I don't care if the portfolio produces income. I want it to break even.
Right.
But even at that point, if it just breaks even in 20 years or 25 years or whatever, when these loans are paid off, I mean, you know, every month, I don't know if you guys do this or not, but like every month I'll grab like a coffee or a beer or whatever and sit down with the personal financial statement, update the loans.
No chance.
There's
no chance I'm doing
that. It's like,
that's like a psycho tendency.
Yes. The psycho math brain, it is like $200, you know?
That's
like
nuts.
some of these $2,000, you know? And it's just, it's great.
Holy shit.
It's probably good because then you can see where the money's going and you can see where, okay, maybe I'm bleeding over here. I can reallocate, you know, some resources and fix that. Versus, it's tough.
Yeah.
What about you guys though? Like, what do you like to do? Because I kind of get off on the rentals and chasing the deal. Like from the sales side, it is fun. You get the rush of, got another one under contract. Yeah. But what about you guys? What do you guys, you know, enjoy the most or pursue or
Joe,
whatever?
you can answer that one first.
Well, for starters, chasing deals. Absolutely. That's number one. Definitely getting that rush. That's like my basically adrenaline rush when it comes down to it. But then I'm also like analytical, like when it comes to like numbers and stuff. So I like looking at, okay, where's spending happening and how can we maybe, you know, spend less here and fix something over here where we can actually make more profit. So looking at that side, but just talking with homeowners, I like having conversations and just helping them solving a problem that they might be in. So just doing any sort of problem solving kind of tasks, that's something that I really enjoy. But also like the marketing side is always interesting because, you know, trying to figure out how people think and what's going to, you know, grab their attention versus other things that might push them away from you. It's always just kind of an interesting little experiment that's always going on. So that's something that I really enjoy.
And all those things are the right, you know, I suppose everyone can have a variety of skills, but those are really good interests and skills and things for the investor and owner where you're trying to find opportunities and make sense of the numbers and stuff. That's a good kind of fit for this business.
Yeah,
that makes sense.
And it's for me, like the number side. Oh, I cannot stand it. Like rentals,
you're not sitting down.
I know. It's, to be honest with you, Kevin, since we handed off properties to property management, I don't think I've ever looked at a income report. I literally have no idea, and that's terrible. Like I don't want to say it's like, oh yeah, look at what Carter's doing. That's fantastic. That's a terrible thing.
Sure.
But I literally, even bookkeeping and everything, I hate it so much that the thought of it like makes me just feel miserable.
Yeah.
And I'm like,
Mhm.
oh God, I need to do that. And then you push it off and then you never get to it. But like it's the when Joe was answering, I was thinking about something.
Mhm.
That point in the negotiation process or the sales process with the owner, I enjoy marketing and obviously I have a huge, heavy interest in that. So there's the marketing component. We won't get into the nitty gritty there, but when you're in the sales process with the owner, and then you can see in their mind, in their eyes, when that switch flips of like, okay, Carter, Joe, Kevin, they're not trying to take advantage of me. Like they're legitimately telling me not necessarily what I want to hear, but what is the actual truth.
Mhm.
And then they start coming to the realization of they can actually get me out of this scenario or they can help me out of this situation. And they're being sincere about it. They're not
Mhm.
going to back out on me 30 days later or 14 days later. And it's like a little, probably 10-second moment in the process of these people can actually help me. And that's where like hitting that part, and it happens in every transaction, whether you're talking to them over the phone or meeting them in person. But that right there is kind of the thing that you chase. So it's essentially sales, but the actual conversation piece of you're helping these people. And although some individuals who might be listening or watching right now, they're like, oh, they're preying on people or whatever. Some investors do that. That is not our logic. And the conversation up until this point is talked specifically against that, obviously, if people have been listening. But I don't know, that's kind of where I get the thrill from. And I try to do more of that. And then obviously the marketing, like you're trying to create those realizations behind the scenes before they ever even reach out. So then it's like, well, hey, Carter has been sending me emails. He's been communicating with me. He provided me all these different resources. He gave me a list of contractors and lenders and other things that could help me keep my house or stay in the house or whatever the case is. And he's literally never asked me for anything. He's never even come out and take a look at it yet. It's like that willingness to help. I get some sort of fulfillment out of it. And that's where like even the podcast side, the content creation side, like bridging that gap or having people come to the realization of, okay, this is what this life of real estate can offer you. Once you hit that realization and then changing people's lives for the better, like I don't think there's a feeling like that you can continually sustain doing for a long term, like regardless of sales position or whatever, but just helping people achieve certain things is addicting. And that's kind of what I'm addicted to on that side of the business.
Right.
So,
and it kind of goes like what do you measure against?
Yeah.
That like the math and I mean, obviously we're all in real estate to try to provide financial stability and those things. And there is real utility there. But it's like we are beings of meaning. That like, certain like happiness and joy and different emotions like that can be great, but they're intrinsically quite temporary and fleeting. And so like that 10 seconds that you're describing, like that's meaningful. And that the life of meaning, like that's worth chasing.
And it's I think getting an owner, like when I don't know, there's certain scenarios that you run across and the owner's like, okay, well, I'll get back to you, I'll let you know. But in your mind, it's like their mind is probably made up to sell it to you in some way, shape, or form. But they have to work out some behind the scenes issues before they make that commitment. And that's where I think people, especially newer salespeople, regardless of the industry, they get it wrong is they try to push through that. And then you're raising red flags on the seller side. And then I think of, okay, if I was in their scenario, what would I want to have happen? Or what would I like to have happen? And try to just always approach things from that side of the spectrum. And that's
and
even
obviously it works. Like it's productive and it's doing the right thing.
I mean, there are times that I think sometimes they also like need someone just to kind of dig into that. Because where they might say, oh, I just need to talk or think about it. Give me a call back in a couple days. Sometimes I like to say, is there, I guess, when it comes to thinking about it, like what's 1, 2, 3 things that you might be kind of, bouncing back and forth that you're trying to decide. And sometimes you can kind of walk through that and discuss it with them without being pushy. And more times than not, they explain what they need to kind of think about. it's like, okay, I'll give you the time that you need. Obviously, it's a big decision. You know, I don't want to push you or not trying to close you today. But there are times where, you know, they just need to.
Do you tell the
say it
owner
out
you're trying to
loud.
close them in person?
Yeah, I do. I'm like, all right, I'm closing you right now. And
Joe's here and I'm going to close it.
Hi, my name's Joe and I'm closing you today. Sign here. But there are times where I think pushing just a little bit, but not coming off as like that car, you know, used salesman.
Yeah.
Right.
You know, where you're trying to close them that second. It's just try to get some clarity, and sometimes they just want to talk it out too. But a lot of times, you know, giving them that time does actually put you at a higher level of interest versus if you're trying to just hammer them and close them that day. So I think can go a little bit both ways, but for sure, just sometimes taking your foot off the brake helps out with giving people the space that they actually need to make a decision. Because it's not like they're selling, you know, something that costs $10.
It's a big
it's
thing.
A huge
it's
thing.
huge.
And there's emotions that they're dealing with.
Yeah.
And those things, you know, people have to kind of figure out themselves and work through before making any sort of big decision.
Right.
So,
And
Absolutely.
Kevin, for you, so I know we were talking about it briefly before jumping on the podcast. You said you're in the process, or you just accepted an offer on the first spec build. Explain to us that process a little bit. Like uncover, and as much as you're willing, you don't need to name like numbers or profits or anything like that, but just kind of the basics of how you got into it, and then we'll kind of wrap after that. But
Sure.
hey, it's very interesting to me.
Well, here, I guess just to kind of take a step, because this is where my mind goes with it, is like the reason to do it. And it's the same reason for the rentals and the trade shows and every important strategic decision is there's more than one, what would you call it? Orders of consequence of a decision. So the first one is like the incremental profit or loss on a decision of a project, of a flip, or you work out. It's you have the calories you burned or whatever. But the second order of consequence is proving whether or not it's worth it. Do you do it 100 more times, or do you stop there, or make an adjustment and test the next thing out? And so everything has been. Whether or not this made money or not almost didn't matter. It's more just information on, do you do this many more times or not? And that's the real kind of decision base. But this one, you know, because with the rentals, you know, I want to keep growing and then, you know, paying off debt and all these things, and you need income, you know, that, you know, I flip houses and those are fine, but I'd like to add, not replace, but add to that. And so, is there margin to build or not? And how do you do it?
That's what I was about to.
That was really kind of let's find out. And so, you know, and this one was, it's in Ledgeview. Okay. And it's a medium higher end luxury, spec build. And, you know, and I got connected with the builder, and he's the one that actually brought me the lot. And it just happened to, you know, and you have the numbers on theory, and it ended up being better than I'd expected it to be, which is kind of cool. And I think I said this, but it's like, this is a great way to set a false expectation.
No kidding. Exactly.
For all these other ones.
Make 50 grand on your first flip. It's like, oh yeah, everyone's going to be like that.
Yes.
No, not really.
Right. Like, and you know, with the flips, you know, we try to target a $20,000 margin on the flips. And then in reality, they end up being like 16,000. And that tends to be pretty much how they go. And it could go up a little, could go down a little, usually within about 5,000, but 20,000 is where we kind of target. And then with the spec, it's a higher cost. It's the higher holding costs every month.
Right.
You know, so it's like you need a little more margin to kind of justify it or have room.
When you're, I'm assuming it's financed. Is that
100%?
Okay.
It's 100% financed.
So with that, is it through local lenders that you have relationships with, that do they go off of portfolio value, and then it's like, well, can you cross collateralize a little bit, or not necessarily? I don't know how that works, so that's why I'm
it will
curious.
be that.
Okay.
So this one, and I've financed, you know, to kind of get to this point, there've been a variety of different kind of ways of putting the property together, but this was one of them where the bank will do 80% of cost between the lot and the improvements. They'll do 80%, and then I had a private lender for the other 20%, second position to the bank, and and I communicate that to the bank of this is how I'm putting it together, and some are fine with that and some aren't, but most of them I work with now, they understand.
Oh, they have trust. It's like you have a track record of past successes.
Yeah. But like you were also talking about going across, recollateralizing. And so like we have another lot under contract that I have one chunk of properties with Range Bank, and they'll, look at putting additional debt on that. And then that will be, instead of me having to borrow the other 20%,
correct,
which it is still borrowing 20%,
right.
but at a lower interest rate,
correct.
at bank interest rate instead of private money interest rate.
Which saves you a few points.
Oh, yeah.
A little bit,
Yeah. And are you the general contractor on the build or no? Okay.
No.
So it's
The
everything's
builder's
pretty
the
much,
GC.
Okay.
So that works out pretty well. So then
Yeah.
it's almost like and correct me if I'm wrong, but you're obviously putting the funds up, you're doing everything like that, or the bank is assisting with that.
Just putting it together.
And then they're GC and everything, they're taking it from beginning, middle to end.
Yep.
And then profit share, or how does that normally?
No,
or just
they
100?
make
their builder fee or something
builder
like that.
fee.
Okay.
Okay.
Yep. Their
Interesting.
GC fee
That's really interesting.
Yeah, that's
so
it.
I guess what do you have to give them, or I guess explain
builder
to them?
fee.
Yeah. Well, that, but I'm saying, what information do they need from you in order to, go from building a house? Do you tell them this is the type of house I want, this is the timeline, or is it just you tell them, hey, this is kind of the layout and show me the drawings and then let's get going?
It's more kind of deferring to them because since this is my first one, I mean,
of course,
they know more than I do.
Correct.
Yep.
And
That's
they
interesting.
build their own and sell their own, so they they've got a good idea of what to do, and so it was very much like, what would you do if this was your lot, and then just okay, let's and then you run the numbers and it's like, this might work, and all right, let's try it. And that's very much how it's gone, and and even like the flips that we do too, it's kind of the same thing almost, of like the contractor, they're getting a GC. I don't because do you guys GC your own for flips now, or?
Yeah, like generally, there's people on our team that do that. Yep.
Okay, got it.
Yep.
So like even those, I'm not involved with.
Oh, really?
I don't even walk the place with the guy. I don't even share my rehab budget with him. We just talk, and it's like, what do you have in here for rehab? But we're just kind of on the same.
Correct.
Because he manages all my rentals too, so we're just kind of on the same page of this stuff. And it is so. This, from the owner standpoint, it is so easy because of the access to vendors that we have, and it intrinsically trims out the margin. So that means you can't do other opportunities that you could if you were putting these all together yourself. But like, you don't have to pick out materials, you don't have to deal with labor, and if guys don't show up, getting someone else, or you lose someone from your crew and you need to replace them, and it removes all those strains. And and you make less money, but you're kind of picking your problems.
Correct.
And same thing with the builder. They pick it all out. I didn't pick a thing out. They were like, this is approximately what we're building. This is approximately the cost. And it's like, okay.
That's so cool. Yeah. I think there's a million different approaches to doing things, but it's like whatever works in the moment, like just keep chasing after it. Now, are you trying to source any like vacant lots on your own now that you've had proof of concept, or not really?
This is still, because again, it's like soon, not yet. Because this is still like, is this happened to work out really well one time? And you do so we're doing another one here to prove out the model more further. But then after that, then I'll be looking to do more of this, and this is kind of an aside. I've been wrong on like because this assumes the market's at least not going to decrease. And if it does, then that changes all the underwriting. So like, and I've been wrong. Like when I thought when interest rates were going to go up, that values were going to come down some. Like we still have the shortage, which kind of puts a floor to things, but I thought that it would have changed it, and it didn't. So, I kind of keep an eye on like kind of holistically in the economy, and and then local market dynamics, and then like the debt that the U.S. has. So, how that's going to factor into how much demand there is for bonds for the U.S. and then our interest rates will change.
Yeah.
So like try to kind of have some, but I'm not smart enough to really know if I'm right or not.
Hey,
it's
you're
just
smarter than me.
You're already doing
You have a lot more
way
intelligence than I do.
You're already researching way more than the average person because
Which is crazy.
Just I think doing that allows you to have a little bit more comfortability with, making a decision on taking on a project like that. And I mean, we're all keeping an eye on the market too, because as soon as that market dips down, then
you got to adjust your
Oh, exactly.
You have to be ready to move quick
Yeah.
to either adjust this exit strategy or just, the pricing of everything. You have to be ready to move on. So that's smart that you're keeping an eye on that and keeping that conscious.
I didn't say I'm good at it. I just look at it and I'm
right,
like,
right.
maybe this is right.
But think how,
But looking at it is
me in that scenario, I would not look at anything. I would be like, okay, do the
numbers,
numbers work?
the numbers,
Does this make sense? Okay, let's pull the trigger.
Right, yes.
We'll figure it out later. But we've been going for an hour. So I appreciate you coming in, Kevin. Where can people follow you? Do you have anything specific that you want to shout out?
Facebook. Shout out to my beautiful fiance. I told her I dropped her
cool.
name. So June 6th.
Congratulations on that. I know. I
Congratulations.
saw you guys got engaged.
Yeah,
That's
thank
awesome.
You.
So that's super exciting.
But just Facebook.
Yeah.
Facebook, you can find me. And
Awesome.
I have two Wisconsin home buyers with an S, and foxvalleymultifamily.com. So both of those people could find me, I guess. But Facebook is someone wants to get a hold of me.
Perfect.
Easy.
Awesome.
Well, appreciate you guys watching as always. Hit the like and subscribe button. We'll see you in the next one.